This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you are not ahead, you are under. It is Wednesday morning, 3rd of June, 2026, and the global macro board is flashing an intense game of chicken between geopolitical headlines and corporate earnings. If you are trading the news blindly right now, you are getting chopped up. Let us get you caught up for the global open. First up, the 60-second global macro and crypto flash. We have a ceasefire stalemate. The massive paper relief rally we saw last week is aggressively colliding with reality. The Iranian Tasnim news agency reported that Tehran has officially suspended indirect negotiations with Washington over the ongoing conflict. Meanwhile, Trump digs in. In true fashion, Donald Trump shrugged off the breakdown in an interview, stating he did not care if negotiations were over and that the process had started to get boring. However, he quickly walked it back on social media, claiming he still expects a deal to reopen the Strait of Hormuz within the week. This leaves oil hovering in the mid-94s. Brent crude futures took a violent 5% elevator ride up earlier this week before cooling off slightly to trade around $94.23 a barrel this morning. WTI is holding steady at $91.31. The risk premium remains heavily embedded. Looking at equities, IT stocks saved the day. Traditional indices pulled off a massive intraday U-turn yesterday. After an ugly gap-down open, India's Sensex surged over 1,000 points from its lows, to finish up 382 points, while the Nifty reclaimed 23,483. The entire rescue mission was driven by a historic 4% explosion in the IT sector. Finally, we are seeing Bitcoin volatility compression. Bitcoin is behaving like a coiled spring, trading flat around $77,000. Expected 30-day volatility has hit its lowest level in 9 months, entirely shrugging off nearly $1 billion in net outflows from U.S. spot ETFs. Let us take a deep dive into how explosive AI and enterprise cloud earnings in the U.S. just threw a lifeline to global equities, blinding investors to the deadlocked reality in the Middle East. We are watching a profound structural divergence play out live on our terminals this Wednesday morning. Half the market is hyper-focused on the brinkmanship in West Asia, while the other half is blindly chasing tech growth. Consider the disinformation trading trap. The headline volatility in oil right now is purely a psychological war. The paper market dumped 16% in May on peace hopes, only to spike 5% in a single session when Tehran walked away from the table. Trump's public posture, treating multi-billion-dollar energy security talks as boring, is a tactical negotiation ploy. But do not lose sight of the physical metrics. Actual tanker movements through Hormuz are severely bottlenecked. Until physical crude is clearing the ports normally, any sub-$95 oil price is a gift to build energy positions. This brings us to the U.S. tech shield. Why did the stock market recover so violently yesterday despite the geopolitical setbacks? Look across the pond to U.S. enterprise software earnings. Blockbuster Q1 results from tech heavyweights like Salesforce, beating estimates by 24%, and Snowflake, whose stock skyrocketed 37% after hours on explosive AI cloud demand, sent an absolute lightning bolt through global tech sectors. Indian IT giants like TCS, Infosys, and Persistent Systems caught a massive wave of conviction buying, proving that the enterprise AI spending boom is shielding the index. But look at the currency and FII drain. While equities look green, the foreign exchange market tells a darker story. The Indian rupee just slumped to 95.29 against the US dollar as persistent FII outflows hit the tape. FIIS dumped nearly 3,911 crore rupees in a single session. Even with strong domestic manufacturing data showing a 6.2% output expansion, global capital is still playing a defensive game. Here is the TradeFlow take. This market is highly bifurcated. The tech and IT sectors have earned their rally on raw, fundamental corporate spending, making them an excellent near-term stronghold. However, the geopolitical floor for commodities is set. Use any headline-driven dips in energy or hard assets to stack your structural defenses, because the Middle East deadlock is far from resolved. Stay liquid. Stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.